And in this video, I just wanted to go ahead and cover why I use the indicators that I use, particularly the RSIs, the counter RSI and the 4-period RSI. Obviously, as you can see here, the only things I have on my chart are the simple moving averages, the 50 and the 200 MA, which are pretty standard. Pretty much on every chart, everybody has this, especially on the daily chart. When you're looking at a daily chart, you want to have these moving averages, obviously for obvious reasons. When you have a def cross like we did here, and when we have a positive crossover like this, obviously indicating, hey, we have new highs upcoming soon. So you just want to keep an eye on that. But I'm not going to go into these too much. These are just standard, so you should be familiar with these by now. The next one is the volume. This is the volume I use. I shared it on the chart setup video. If you haven't seen it, go ahead and look at that video for how to set up your Think or Swim platform and how to you use this indicator and load it onto your platform. And basically what I like about this one is that it gives you the difference in volume between the buyers and the sellers. As you can see here, you can see that it kind of breaks it down. It tells you, hey, the current bar only has 23% sell volume as opposed to the buying volume. So, what does that indicate to you? Hey, you know what? There are more buyers than there are sellers. The likelihood that this is going to go higher, especially when you're combining it with things like this. We have a positive crossover. It kind of tells you, hey, we may be going higher in the long term here. But the one I really want to cover is the RSI, the 4-period and the counters RSI, and why I use two. I've had this question asked before. Why do you use two? It's the same thing. I'm like, yes and no. And I'll go into this briefly. This is, as I explained on the last video, the thing I look for on indicators when I'm looking through them personally is, do I understand them, and do I see something that when this happens, then a reaction happens to kind of give me a heads up. Hey, this is what may be happening soon. And obviously, nothing is set in stone, and I go through some examples here. But this is what jived for me. I just want to share this with you guys, and then you guys can go ahead and find what works for you. If you like these, go ahead and use these. But the point is that you understand what my process was for determining, hey, these are the ones I like, and this is why. All right, so I'm going to go ahead and go to some examples here. On the last video, I kind of showed you guys, hey, when we have a pattern like this was a perfect example here. We had a beautiful hammer being formed here. Let me see what the RSI was doing. The RSI, both of them were over 80. And pointing, hey, you know what? We're over 80. And the next, actually, you know what? Let me make sure these are both set up correctly. 80 and 20. There you go. All right, so now we're both over 80. And let me double check this one as well. Okay. So this is what I'm looking for. Are they both matching? Are they both over 80? And where are they? And I'm just like, okay, so now we have a beautiful pattern matched along with a decent amount of sell pressure. And then we have the RSIs both indicating, hey, we are at oversold or overbought levels. So to me, this says, hey, man, the next candle is probably going to be a down candle. So it's like, okay, boom, boom, this is what we got. Here you only had the one and the other one wasn't there. So this is what the next candle did. So you see what I'm saying? This is what I look for. Okay, here we have both of them over at the top. And here's a perfect example. Both of them are over 80. The next day, yes, it gapped lower and it still went higher. So obviously nothing is set in stone, but it didn't finish higher compared to the previous day. And then look at what happened the days that follow. So that's why I like this indicator. So when they're both matching, okay, so both of these are under 20. Let's take a look here. What happens the next day? So both under 20 here. The next day, it gaps up and goes higher. And that's what I saw when I saw this indicator. Here we go. Both under 20, and look at this. Now, it continues to go lower. So just because they're both under 20 or above 80 doesn't mean that it's immediately going to reverse. You obviously have to look at other market internals, and that's when you have to pay attention to the VIX. On a rising VIX, like we had in this scenario here, don't fight the trend. We're not going to fight the trend, obviously. So you have to pay attention to things like that, you know. So it's like, okay, I'm not gonna fight the trend. Look at this, look at this, look at this. But now when I'm both below 5, what I'm looking at this level is, hey, you know what? As soon as it hits here, I'm looking, you know what? And actually, as soon as it hits this level here, I'm paying attention. That doesn't mean I'm gonna go against the market right away, but I'm keeping an eye. Hey, be cautious that soon we're gonna get a reversal sometime in the near future. Okay, so boom, we get a reversal here. You know what this tells me? Okay, now we're out of this oversold area. You know, I may not get in here, or I may get in here depending on my box in entries, etc. I remember, always remain objective. But hey, now if you're looking at the daily, hey, you may get in here. Now you know that you have continuation. Obviously, always paying attention to other market internals and what the charts are telling you. So you see here, and then we go higher. And then it went higher. Look at the indicator, look at the indicator, boom. It peaked, crossed over the 50 MA. What did it do? Hey, we got to go back to that 50 MA. What did the RSI do? It confirmed, hey, we have a good chance of going lower the next day. And that's why I like these guys. That's pretty much what I see here. You know, it's easy to see the negative and positive divergences on them. And that's what I kind of see. And if you look at other time frames, let's go ahead and look at the 30-minute. Okay. Here's an example. Let's go ahead. Let's take a look here. Pre-market. Okay. They're both, not both of them are in. So this one, they both are in. The next candle was a red candle. Obviously, it's pre-market, so there's not enough volume. Here we have down. The next candle was a green candle, and then it kind of started to reverse. But today is a choppy day. You'll see on the next video, I am going to cover the things I look at to stay out of markets of days like today, because we have plenty of indication today that today was going to be a choppy day like it was. All right, let me see if I can find a good example here. And you have to obviously learn how to ignore the things that, you know, hey, when it's not working, it's just not working. All right, here's an example. All right, both over 80 at this point here, pre-market. Here we go. They joined here. You're getting a nice little signal. And if you're looking at the 10-minute, you'll see that you'll actually get a matching indicator signal here, where it tells you if all the charts from the 5-minute all the way to the 30-minute, even possibly the 1 hour, are matching at overbought levels, I am starting to be cautious and start looking for potential reversals on the markets or the symbol that I'm trading. And that's what I'm looking at. So the reason I picked these is just because it just works for me. Again, both below 80, and then it started to reverse higher. See what I'm saying? So that's just why I use this. Obviously, this may not work for you. I know some of you may say, that still looks confusing as shit. You know, I don't get it. You know, that's fine. You know, find the ones that work for you. It's just when I see this, I get it. It just hits me like a ton of bricks. Oh, I understand it. I see it. I see the divergences. I see things. So here you have positive divergence. So even though you had this pullback, you know, you have to keep that. Oh, okay, well, we have positive divergence here. Let me wait for a better entry when it goes lower, especially when you're looking at the daily time frames. It's like, hey, you know, we got positive divergence on the 30-minute. The daily supports it. Let's wait for a pullback below 20 before we get in and go long again. And look at what happens the next day. Obviously, it goes long this day, and then we continue higher. I mean, you can't argue with this stuff. So that's why I use this, guys, because it just works for me. I hope you guys find the ones that work for you, and I hope this video was helpful. I'll see you guys in the next time.